Hello everyone, it's K-Ape. It's time to wrap up the market trends for the week. Can you believe it? We're already at the end of 2025. Recently, the US stock market has been catching its breath, closing a bit weak without any major momentum. One interesting thing, though, was the strong rebound in precious metals. But honestly, the market's eyes are already moving past 2025 and looking straight toward 2026. As we prep for next year's investments, one of the biggest stories we need to talk about is Dan Ives' top picks list from Wedbush. Ives named 5 key stocks he believes will lead the AI revolution next year: Microsoft, Apple, Tesla, Palantir, and CrowdStrike. Now here's the kicker. Nvidia, the very symbol of AI, was actually left off the top 5. Now don't get me wrong, this doesn't mean Nvidia is losing its edge. Ives still sees them as the heart of the AI ecosystem. But his strategic take is that we should now focus on companies that can truly leverage the multiplier effect of the AI revolution, rather than stocks where the growth is already fully priced in. Let's look at the reasoning. For Microsoft, it's their dominance in AI and cloud, specifically how the Azure and Copilot ecosystems are driving revenue growth. Apple, despite being called slow on the AI front, is expected to see a massive re-rating in 2026 through its strategic partnership with Google. It seems Ives really likes Apple's strategy of integrating proven LLM rather than trying to build everything from scratch. For Tesla, the value of autonomous driving and robotics is seen as the key variable that could push their valuation past the $1 trillion mark. And finally, for Palantir and CrowdStrike, it's all about the exploding demand for AI across government and industries. Cyber and data security are becoming the must-have infrastructure for AI, making these two the biggest winners in that space. But there's another variable we can't ignore: the US-China tech war. Recent reports show the Chinese government is basically forcing a policy where new semiconductor facilities must use at least 50% domestic equipment. Their ultimate goal? 100% Chinese-made semiconductor production. It's a clear signal that they want to break away from the US-led global supply chain. This move is going to have a massive ripple effect across the entire global grid. We shouldn't see this as just an economic policy. This is a tech war framed as a survival strategy. On the macro side, it all comes down to interest rates, jobs, and the AI bubble debate. Right now, the Fed is holding rates steady and being very cautious about further cuts. The job market is staying pretty stable with unemployment around 4.6%, so no signs of a sudden crash yet. Regarding AI investment, some are still shouting bubble, while others argue this is structural growth born from the AI revolution. Major financial institutions are actually predicting that AI-related capex will skyrocket again in 2026, acting as a powerful engine for economic growth. This debate really boils down to how much AI investment actually contributes to the bottom line. Most forecasts suggest this surge in capex will boost labor productivity and contribute significantly to GDP growth. While we might not see a moonshot in growth rates, a steady upward trend is likely, with 2026 GDP growth expected to stay in a strong zone. I truly hope these insights help you build a winning investment strategy for the coming year. If you found today's video helpful, please hit the like button and subscribe. The stock market is about to open. If I make any trades today, I'll share them on my channel's community board between 8 and 9 a.m. I'll be back next time with even more valuable info. Thanks for watching.